All right, today we're diving into an investment thesis that makes a pretty bold claim about a company that's right at the heart of this whole nuclear energy conversation. We're going to unpack the source materials argument for why Denison Mines could be a name you might be hearing a lot more about. So, right out of the gate, the source material makes this really bold claim. It calls Denison Mines the uranium bull's secret weapon. I mean, that's a powerful statement that really sets the stage for a high-stakes argument. So you gotta ask, what's behind a statement like that? So let's get into it. The thesis argues that Denison is at this huge turning point. See, they're going from just being an explorer, a company that looks for uranium, to what the source calls a producer in waiting. Basically, a company that's about to start actually mining the stuff. Okay, so that really boils it down to two big questions from the source material. First, what is this so-called secret weapon? And maybe more importantly, why now? Why is this the moment to be paying attention? Let's dig into that first part. Okay, so the first piece of this whole puzzle is the asset itself. We're talking about a project called Wheeler River, but really the star of the show is a specific deposit there called Phoenix. This is really where the whole story gets started. The source puts it pretty bluntly. They say this is not your grandfather's mine. And the big reason why, the real game changer, is a technology called in situ recovery. You'll see it called ISR. Now, ISR itself, it's not brand new technology, but the thesis here is that using it in Canada's Athabasca Basin, which, by the way, has the richest uranium on the planet, well, that is what could be a total revolution. So, what the heck is ISR? Well, to put it simply, instead of digging these giant open pits or deep, dark tunnels, you just pump a special liquid underground. That liquid dissolves the uranium right there in the rock. Then you just pump that uranium-filled liquid back to the surface. It's kind of like drilling for oil, but for uranium. Way less invasive. And this right here just shows you the night and day difference. On the left, that's old school mining for you. Huge pits, massive disruption, piles and piles of waste rock. And then on the right, you have ISR. I mean, look at that. It's a tiny footprint. And according to the source material, this isn't just about being green. This is a massive economic advantage. So how exactly does that translate to wins on the balance sheet? Well, the thesis breaks it down into three huge advantages. First, you've got lower CapEx. That's the upfront cost to build the thing. It's just cheaper. Second, you've got lower OpEx. That's your day-to-day operating cost. And third, and this is a cool term, what the source calls environmental alpha. It's basically an edge you get because permitting is easier and you attract all those ESG-focused investors. It's a big deal these days. Okay, so a fantastic asset and this amazing technology, that's a great start, right? But it still doesn't quite answer that big question, why now? And that brings us to the second pillar of this argument, the catalysts, the specific things that the source says are all coming together right at this very moment. Now, this timeline here, this is absolutely crucial to the argument. It shows a really clear path forward, and it's not some far-off fantasy. Look at this. Management is talking about a final investment decision. That's the big go button to start building as soon as early 2026. Construction would kick off right after that, and they're targeting their first batch of uranium by the middle of 2028. The point the source makes is this isn't a someday plan. This is a concrete, near-term schedule. And here's what's going to fuel that timeline. We're talking about a war chest of around $720 million. And this is a key point in the thesis. The company is already fully funded to build the mine. What does that mean for an investor? It means they probably won't have to sell more stock and water down the value for current shareholders just to raise cash. That's a huge risk taken right off the table. Okay, now let's zoom out and look at the bigger picture. The price of uranium itself has just exploded. We're talking a surge of over 50% in just the last couple of years. And get this, the project's original math, all its financial models, were based on much, much lower prices. This creates what you call massive leverage. Every single dollar the price of uranium goes up adds a ton more potential profit to the project's bottom line. It's a huge tailwind. All right, so we've got the asset and we've got the timing. But, anyone who's looked at mining stocks knows that a great plan on paper can totally fall apart if you don't have the right people to execute it. And that's where the source brings in the third pillar of its thesis, the management team. The argument is that this team has a proven track record of getting things done.
The analysis points to three really smart moves as proof that this team knows what it's doing. First off, permitting. They've managed to navigate the super complex, notoriously tough Canadian regulations. Second, they made this brilliant move, according to the source, of buying up millions of pounds of physical uranium when the price was in the gutter. It It was a genius way to de-risk their balance sheet. And third, they have this great asset synergy. They own a big chunk of a processing mill nearby, which means they not only have a guaranteed place to process their stuff, but they also get an extra stream of income from it. Super smart.
So, you've got the asset, you've got the timing, you've got the team. So what's the verdict? Where does this all lead? Let's take a look at what the source says about the company's future and, well, the bottom line. And this is a really important point in the analysis. Denison is not a one-trick pony. Once Phoenix is up and running, they have another big project called Griffin waiting in the wings. So there's a path for future growth. Plus, they've got other exploration joint ventures going on. But the key catalyst the source points to is this idea of a re-rating. That's when the market suddenly wakes up and revalues a company. And that often happens the moment the first shovel hits the ground. A moment that, according to this thesis, is pretty much right now. Okay, this slide kind of breaks down the source's take on the market specifics. And just to be super clear, we're explaining the thesis here. This isn't financial advice. The analysis points to a support level where the stock seems to find buyers and a resistance level it needs to break through. And it flags that official notice to proceed in late Q1 2026 as the next huge event to watch for. And all of that brings us to the final and I think really provocative question that the source material leaves us with. It kind of reframes this whole discussion. Is this just another mining stock, a company digging stuff out of the ground? Or, as this thesis argues, is it something more? Is it a really focused, high-leverage way to invest in the entire global comeback of nuclear power? That's really the big question this whole analysis wants you to think about.